Hello traders, everyone, my name is Gregor and welcome to our new video surfing the Elliott waves, where I will look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the US yields, dollar yen, crude oil, a quick look at DAX, Euro, Aussie, gold, and even Bitcoin. So we have a lot of markets to go through, so I will try to be as simple as possible and quick here. So if jobs data will be strong, you can expect that US yields will rise further, and this will make a stronger US dollar because Fed will probably be looking for further rate hikes, because if there will be more jobs, it means that economy is still doing well, and this, if economy is doing well, it means that inflation will stay probably up. If the data will be weak or less jobs than expected, or let's say below 100k, then I think that the US yields will drop, dollar will also turn to the downside, and this would have a positive impact for stocks, okay, because market participants would then bet on the Fed to end its hiking cycle. So okay, so for now, when looking at the price chart, okay, it's still an uptrend. We cannot say that the US yields are topping out, because it's still an uptrend for the last 12 months. So if I can label the wave count with an uptrend where I would expect more upside, then I will do so. So looking at this updated US yields chart, you can see that we have potentially here 5 waves up in progress. And yes, we have seen a recent test of the highs and a reversal down, but so far I still think that this can be a way forward within uptrend. Okay, also always when I'm tracking higher degree fifth wave, I really do not labeling end of the whole cycle when I have just a minor spike to a new high. Okay, I want to see something more aggressive and stable to the upside to suck in more traders who would be hawkish maybe, and then later on I would be expecting a reversal. So for now, yes, we can be in the late stages of this recovery on the US yields, while the dollar index is approaching this resistance. But looking at these short-term cycles, I'm not really convinced that we are already topping out here. So I'm afraid that there is room for another leg higher. Now looking at dollar index, as you know, I'm tracking two wave counts, two interpretations. Now first can be that we are in a wave A, wave B pullback now, and wave C later on could rally towards 105, 106 area, or maybe we are already in wave C of a flat correction, and it means that we will see a reversal lower earlier than expected, but still the same level, so 105, 106. Okay, so for now, I will stick with this ABC recovery. It's the short-term bullish picture, simple because I want to stay with this current strong rise here for the US dollar for the last, that is in play for what, the last month and a half. So looking at the updated price data, we've broken this trend line support, so looks like that we could be in a wave B correction, but wave B could be a complex, could be sideways, could be deep. So it's really important to see how the US yields will react to today's data before we maybe will have, and how obviously how the week will end before we can more precisely level this corrective wave B. But overall, I think that there is still room for more upside after this pause. Okay, now looking at dollar yen, also another market which shows an incomplete dollar strength, at least when looking at the 4-hour time frame. So that was a very nice wave 1, and then an extended 5 waves up for wave 3, very clear, nice 5 subwaves up, and then we have seen also this wave 4 founding a support at the previous swing lows here, and now we are back at this level. So clearly that's a very important key level here, around 145, around 144 you have the 38.2%, and also that's the area where wave 4 distance would be equal to wave 2. So the whole this zone around 144 to 145 is still very key for dollar yen to stay in uptrend. You definitely want to see a close below 144, maybe to start considering that we are topping out. But for now, it's still in healthy uptrend. Also, if we are tracking at a higher degree, wave 5 keep in mind that the higher degree wave 5 is a motif wave, meaning it should be structured by 5 subwaves, and for now that's not the case yet. So that's why I think that we should be looking maybe for more potential upside. And if today we will finish the week around current levels or here around 140.45, I really think, or maybe a spike higher, I really think that more upside will be in the cards. Now looking at crude oil, now crude oil is making a pretty aggressive, interesting recovery despite these dollar moves, but keep in mind that not only crude, even gold and stocks did well this week. So there was some there is some not really perfect correlations, I should say, with the FX when looking at different sectors. But for now, we just have to respect what the market is doing. By the way, we were looking for this recovery here on crude oil for the last week or so, because we identified this as ABC pullback a week back, and then noted that the 38.2% is a very strong FIB support level. Also, this broken trend line later on could confirm that wave 5 is in place. So I think that now there can be more upside. Of course, since we are approaching this and testing these highs, there can be some intraday setbacks, but eventually 86 up to 88 is a projection and potential resistance for this fifth wave. So now when we are riding here into the late stages of a fifth wave, just keep in mind that there can be a slowdown potentially next week. Also looking at German DAX. Now German DAX is coming to the upside. It has a pretty nice recovery away from that July low. So the summer range is still in play, and looks like that we are now testing the upper side of this recent range. So 16,000, definitely very important key level. It's a round figure where traders, psychological level that will traders pay a lot of attention on, and I really think that this one is important because we also have an ABC rise from the recent lows, so that's why this level matters. Not only that, we have also the previous swing high here from earlier of August, so I think that whole zone here will be decided if whatever are going to resume back to the downside or maybe even extend higher. I would probably starting looking for something else here. If we, let's say, today finish or maybe even next week we break above or towards 16,200, then I think that the choppy price action here trapped in this big summer range will resume. In such case, I would most likely consider this wave count. Let me switch to the daily, which shows the potential triangle in the making, which is part of the bullish sequence, right? So if we see 16,200, I really would start looking for this pattern to unfold. Okay, but for now it's still too soon. I think that this wedge pattern is still not out of the woods. I mean, we are currently testing this trend line potential resistance here, so clearly you don't want to say that we are going back to the upside, because it's there right here right now, the key resistance area. Now let's take a look on the euro. So euro dollar recently came to the downside. We've been tracking this leading diagonal for a while, and notice that upper trend line was broken, so looks like that we are now in a sideways consolidation, wave B, which in my opinion can be even a flat correction. So even if we retest this 107.65, still we can, I assume that we can later on test once again this 109.30 area, but eventually sooner or later we will see more weakness, I believe, for within this higher degree ABC drop. Okay, so euro I think remains on the bearish track, but even if we retest higher resistance levels, can be temporary. Now let's take a look also on AUSD. AUSD for now remains in downtrend because notice that the rise from the recent lows still looks to be in three waves. So we are currently testing key resistance at 65, from where I would not be surprised if we see a new break to the downside. Even a higher level would be at 65.50, where you have the 38.2%. So even if we see after non-farm support another spike to the upside, I would not say that wave 4 or that we are bottoming. I would most likely be looking for more complex wave 4. So still watch out this upper channel line of this base channel actually. If the lower one is the resistance one and the mid one is also the resistance one, even the upper one is the resistance, but if the upper one, okay, the most extreme one is going to be taken out, then I would say that something is changing and that most likely we are bottoming. So as long as we are in a downtrend and testing these channel lines, I think that there is still a reason, very good reason actually to stay on the bearish track, because after all we have lower lows and lower swing highs, which is a downtrend. Now let's take a look on gold. So gold, surprisingly, I mean, despite of all what has occurred this week or over the last 2 weeks with the US dollar that has seen a pretty nice strong move up, still gold is also recovering. Okay, so let's say if maybe the US yields will come to the downside, okay, then dollar would drop, and in such case I think that gold will have a very strong move to the upside because it's already strong. So if the US dollar will be weak today after the data, expect metals to do very well because they are already strong. So I think that there is a very valid target here on the upside around 1970 to 1990 area. So that's the area, the resistance area for potential flat correction, which in my opinion, or maybe even triangle, which in my opinion is still in the making this way big correction, because notice that this drop, okay, from July highs cannot be counted in 5 waves. Okay, I think that was a corrective wave. Also, whenever, as I said already earlier when talking about the US yields, whenever we see just temporary spike to a new high or new low, just keep in mind that this can be still part of the incomplete downtrend in our case. And if I'm correct, then this could be, as I said, maybe flat, maybe even a triangle. Okay, so I would be looking for short-term goals, for short-term strength on gold, but then eventually I think that gold could still see at some point lower prices here for this wave C. So 1800 for this year still very big and important support. So if someone is looking maybe to invest in gold or buy gold, I think that this level could be very attractive. Now finally, let's take a look on Bitcoin. So last time when we covered this one, we said that we are tracking ongoing corrective price action, and looks like the deeper prices are still in the cards. I'm tracking a flat formation, so it's a 3-3-5 pattern when talking about the theory, but notice that this first leg has made multiple swings, so it was an overlapping WXY, but here was also a free wave movement. Okay, so I can label this for you. It was an ABC rally. So after 3-3-5 pattern, what do you expect? That market will turn back into the first primary direction, which by the way was to the upside on Bitcoin. Okay, so since start of the year. So after these 5 waves down are finished, I think that there is a chance for a new reversal higher. So watch out for potentially more weakness in the near term. Maybe 25,000 could be retested, maybe even some spikes below that level to clear some stops, but then watch out for a reversal to the upside. Okay, so I think that this is a corrective price action, but still you want to see dollar to drop sharply or show us an evidences of a top on dollar index before we may finally say that that cryptos are back in a bull run, because cryptos on its own will have a very hard time making any solid stable moves that will last for longer if you have stocks moving to the upside and dollar recovering with the US yields. Okay, Tourists, thank you very much for your attention. I hope that you enjoyed this video. Talk to you soon.